Hey everyone, welcome back to Startup Entrepreneur. Today, we're diving into the failure story of PepperTap, a hyperlocal delivery service that burned through millions of dollars in funding and shut down just 2 years after launch. What went wrong? Let's break it down and learn some important lessons for new entrepreneurs. Introduction to PepperTap. PepperTap was founded in 2014 by Navneet Singh and Anshul Gupta with a bold vision to revolutionize the grocery and essentials delivery market in India. The idea seemed simple and effective, a service that would deliver groceries, daily essentials, and other products straight to your doorstep within an hour. They quickly became one of the most talked about startups in India, gaining significant traction and even raising over $51 million from prominent investors like Sequoia Capital and Safe Partners. With all the hype and a strong product, things seemed promising for PepperTap. The rise of PepperTap. PepperTap's initial growth was impressive. They were able to expand rapidly to multiple cities, including metros like Delhi, Bangalore, and Mumbai. They positioned themselves as the go-to platform for local grocery and essential needs, catering to busy professionals who didn't have time to go out and shop. They focused on speed, promising deliveries within 60 minutes. For many urban dwellers, this was a game-changer. The platform had a great user interface, was easy to navigate, and built a strong customer base. But here's the thing, rapid growth doesn't always guarantee success. The fall of PepperTap. Here's where things started to go downhill. Despite the early success, PepperTap couldn't manage to sustain its growth and ended up shutting down in 2016. So, what happened? 1. Aggressive expansion without solid financial planning. PepperTap expanded rapidly into 10 cities within just a couple of years. While growth is key for any startup, PepperTap's aggressive expansion was a double-edged sword. They spread themselves too thin, entering new markets before fully establishing a profitable operation in existing ones. Expansion required a huge investment in logistics, warehousing, and technology. But here's the problem, the company didn't have a solid financial model in place to support all of this. They were burning through cash, but weren't generating enough revenue to cover the costs. 2. Poor cash flow management. Now, here's one of the key reasons for PepperTap's downfall: poor cash flow management. The startup had heavy spending on marketing, operations, and hiring employees, but it didn't generate consistent revenue. It was burning money at a high rate, all in the name of growth. And the customer acquisition cost, CAC, was just too high. To get more users, they relied heavily on discounts and promotions, but they couldn't turn these customers into loyal, paying customers. This led to a huge cash crunch and financial instability. 3. Over-reliance on venture capital. PepperTap was heavily dependent on venture capital funding to fuel its growth. When their expansion didn't lead to profitability, the company found itself in a precarious situation. They were burning through funds with no clear path to profitability. Investors started pulling back, and without additional funds to keep operations running, PepperTap faced the harsh reality: they had to shut down. 4. Lack of focus on unit economics. Another major issue for PepperTap was the lack of focus on unit economics. This means that the cost of fulfilling each order was much higher than the revenue generated from it. When you're in the delivery business, this can be catastrophic. They didn't find a way to reduce fulfillment costs and increase margins, leading to unsustainable business practices. 5. Intense competition. PepperTap faced fierce competition from Big Basket and Grofers, both of which had stronger logistics, better financial backing, and more efficient operations. While PepperTap was trying to scale, competitors were already optimizing their operations and establishing themselves as leaders in the market. The final straw. In 2016, after a series of layoffs, and an inability to stabilize finances, PepperTap decided to shut down its operations. They tried to pivot to a B2B wholesale model, but it was too late. The damage had already been done. Key lessons for new entrepreneurs. Focus on unit economics. Before scaling, make sure you understand